Hey everybody, Dave here, Hidden Freedom Investing. In today's video, we're going to talk about how you can pay zero federal taxes in early retirement. I did a video recently, and I'll put the title of it here and the thumbnail here. And in that video, I kind of talked about that I was going to do a video or possibly do a video on how to pay zero federal taxes with a $1.5 million portfolio. And so I had a lot of people respond in the comments saying, I want to see this video. So that's what this video is going to be about. So let's go ahead and get started. So before we go ahead and jump into the scenarios, let's go ahead and talk real quick about a couple of 2019 tax code information data points here. And the first one here is the standard deduction for a single person is $12,200, okay? And that's the first data point we're going to talk about. The second data point we need to talk about is the tax bracket here, and more specifically, we're looking under the single column here, and we specifically really care about this second tax bracket, okay, which is for a single person, $39,475. Okay, now that number is very key to the scenario that we're running, because if you go over that plus your standard deduction, you're going to end up owing tax. So let's go ahead and run down the first scenario. The first scenario is a single person, he or she, $1.5 million in net worth, okay, and they have 100,000 of that into a high yield money market account that generates 2% for them, if you want to call that high yield. At least they're staying up with inflation, right? That generates $2,000 of interest income for them every single year. Now the rest of the $1.4 million is in a dividend portfolio, okay? Now the average yield across that whole portfolio is 3.5%. That generates them $49,000 of dividend income, qualified dividends, okay? That's a total of $51,000 of income for that person, that single he or she. And let's go ahead and pop that in the website here and run the numbers. So here we are on taxslayer.com, and this is the site I'm going to use just to kind of run through these scenarios. There's a lot of options here, family income deductions, credits, results. We're going to keep this very simple today, okay? We're not going to run anything, very complex. We're not going to have children. We're not married. There's no deductions. There's no credits, nothing like that in this particular scenario. And we're going to run through two scenarios, by the way, and kind of going to show you the difference between the two. We will save the more complex things for a future video. So in this one, we're not married and we're not, head of household or nothing like that. We don't care about this. We do care about income. So let's go to that tab. We're not, we don't have a 9-to-5 job, okay, because we quit, we fired, right? We retired and we got out of the rat race, okay? So now here we don't have any 9-to-5 income. So let's go to business income, okay? We don't run a business in this scenario, all right? We'll use that in a future video. But what we do care about was we care about other here, all right? So underneath other, we have a bunch of options. So we do have $2,000 of income, all right? And that's from that basically interest sitting in that high yield money market account, used for emergency funds and stuff like that. And that generates $2,000 at that 2%. And the rest of the amount, that $1.4 million generated from that dividend, qualified dividend portfolio, which generates $49,000, should go over here in the dividends, right? No, it's not going to, because I've ran it in this scenario before. In this website, I think they count the dividends as not qualified under the dividend section. So what we are going to do is we're going to put that $49,000 over here in long-term gains, all right? Because long-term capital gains and qualified dividends are taxed the same, all right? So we're going to put the $49,000 there. We're going to put the $2,000 here, which is $51,000 of income. And this is $1.5 million, okay? And these generate $51,000 of income every year. We're going to run the results on this. And we come back with zero federal income tax. That's pretty crazy, right? I bet you didn't think you could pay zero federal tax on $1.5 million of income, right? One thing to note here, there's a standard deduction there showing up at $12,200, and you subtract that from the $51,000 total income. The taxable income's to 38.8. Okay, now that is just below that second tax bracket number I was telling you about, the max number in that second tax bracket, and that's key. Because you go over that, you start getting taxed. So let's go ahead and run through a second scenario here with slightly different criteria and look at the results. So the second scenario we're going to run through today is basically a single he or she, same $1.5 million of net worth. The difference is they have money split up into 3 different buckets that's generated income for them, okay? Now granted, it's the same amount of income. It's $51,000 of income, just like the other scenario, but the outcome is drastically different. Let's go ahead and show you what they are invested in. So this person is invested in real estate note and, promissory notes. Sometimes they're called real estate notes, mortgage notes. I am invested in real estate notes, and if you want to take a look at that video, I will link it up here. And you can go ahead and take a look at that. It generates a lot of income for me, and we're going to talk about that a little bit later in this video. So for this particular person, this single he or she has $500,000 into real estate notes at 3.5% interest. That generates $17,500, and that's interest income. That's key. The second thing is they have a money market account with $100,000 in it at the same 2%. And that's the same as the other scenario, still generates that $2,000, right? And then they have a dividend income with the rest of it, which is $900,000 at 3.5% yield across that portfolio. That qualified dividend portfolio generates $31,500. So in $17,500 promissory notes, the money market at $2,000, the qualified dividend income at $31,500. That generates a total income of $51,000, the same as the other scenario. So let's go ahead and pop that into the website and take a look at the difference. All right, so we're basically at taxslayer.com again, basic info. They are not married, they're not head of household, same as the other scenario. We don't care about all this other stuff, but we do care about income. So we don't have any income here. We are out of the rat race. We are sitting on the beach drinking mojitos. Now, obviously, I made a joke there. It's mojitos, right? So, business income, 0 business income. That is for a later video, all right? So we're gonna go to the other here, and this is where we're gonna populate, okay? So we have interest income at $19,500, okay? Because it was $17,500 from the promissory notes, $2,000 from the money market, high yield money market account. If you wanna call it high yield, it's breaking even at, if you compare it against inflation, but, and they basically generated $31,500 in dividend income, and let's go ahead and take a look at the results. And the results are that they had to pay $733 to federal income tax. Same income, different outcome. Isn't that kind of crazy? Same $1.5 million, but because they invested in different things, they have to pay federal income tax. So the biggest difference between these two scenarios is one of the investors had $19,500 in ordinary / earned income, okay, and that is not tax favorable. The tax code at 2019 favors basically investment income, qualified dividends, long-term capital gains, and interest is not counted, it's not favorable. It's almost like you're going out and working for a living. They don't consider it to be passive. So in summary, basically the difference between the two is the note income, which generates that interest income for that second scenario. That investor basically decided to go a different route instead of just invested in dividend income or ETFs that pay dividends or capital gains. They decided to go with real estate notes or interest income, and the results ended up being that they had to pay $733 in income tax to the federal government. So before I end this video, I just want to let you know that I am 2 years already into retirement planning. It is kind of a long process. I'm going to talk about that in a future video because it is kind of a complex thing, and trying to work towards that 0 goose egg that you're going to pay to the federal taxes. So we'll talk about that in a future video, my whole plan on what I'm going to do. So look forward to that. Plus I'm going to also do some other videos in this series as well, so go ahead and look for those. But before I end this video, I just want to let you know I'm not a tax professional. I'm not a CPA. This information is basically information is coming out of my head, coming out of the website, and don't take it as professional advice. Do your own research, do your own due diligence, okay? So if you truly want to pay zero taxes, you need to think about the state that you're going to live in, and there's only 9 states out of the 50 that you can pay zero state tax. Now, Tennessee just recently became the 9th state, and it isn't until 2021 that the capital gains and I think the dividend income is going to be tax-free. So 2021 we can look forward to the 9th state tax being state tax-free in Tennessee. So that only gives you 18% of the states that you could move to and pay 0%. So, and before we close this video out, just want to let you know that the very last video in this series, we'll talk about the super rich people, like Warren Buffett, and we'll talk about like a Mitt Romney, for example, in 2012, how he paid less than 15% in taxes. It's pretty interesting how that can be done, and most people don't know how they can pay less than 15%. They look at them and say, how do people that make this much money pay less than 15%? We're going to run through that scenario, so stay tuned. I hope everybody had a great new year, and look forward to 2020. Please like and subscribe. Comment below if you have any questions, comments, concerns. And I really appreciate everybody watching, and we'll see you in the next video.